Welcome to Techlandia, a podcast about and for the technology industry, a place to learn, connect, and engage with leaders and thinkers involved in the technology industry. You can check us out at techoregon.org, Apple, Spotify, or wherever you listen. Thank you for listening and enjoy the show.
Welcome, everyone, to the latest edition of the Techlandia podcast series. My name is Skip Newberry, President and CEO of TAL, and we're pleased to have with us Diane Fraiman with Voyager Capital. Diane, welcome.
Thank you very much, Skip. It's great to be here.
Awesome. Well, I thought it'd be great to maybe start by sharing a little bit about your professional background. You know, before you were at Voyager, I think not everyone necessarily in the local market knows that you spent quite a bit of time in tech in a variety of different roles and different companies before getting into venture capital. So I was wondering if you could maybe kind of walk us through your professional journey.
I would be happy to, Skip. And you're right. Most people think that somehow I arrived here in Voyager Capital and there you have it. But I actually was an operator for 25 years. I started in tech. Now we're going to get into just how old I am, but I started in tech in the late 70s. I was a female biomedical engineer in college and figured I could get any job I wanted because they were looking for women engineers. And I was going to be an orthopedic surgeon, which you can see how well that worked out. And so I got a job working up on the hill. I moved from the East Coast to Portland, where I had spent a summer and fell in love with Mount Hood and worked up on the hill. And woman up in Seattle called me and she said, "You should be selling computers." And I thought, well, that's crazy. And she said, "Well, you can make $18,000 a year." And I thought, well, that sounds pretty darn good to me. So I ended up with Digital Equipment Corporation. I was with DEC for 16 years. And I started out in sales, selling hardware. And ultimately, DEC took me around the world and back. I started with them in sales here in Portland, Oregon. Was in the Bay Area, Seattle, then Geneva, Switzerland, Hong Kong, Geneva, back to Seattle. And that was a 16-year ride that ultimately took me from sales over to marketing and business development. When I got to Europe, there were no women salespeople. So I was in the home office in Geneva, Switzerland, and basically ended up making that transition to marketing. And to this day, I still believe some of the best marketeers are people who used to sell. So it was a good move for me. But ultimately, when I came back to the United States, Sequent Computer found me. And Sequent, as many of you may know, was a spin out from Intel. Casey Powell was doing a 4x chip that partnered with Oracle to really do some of the biggest decision support engines at the time in the world. And so I made a move over to Sequent and had a quick stint at Tektronix when in the video and networking division as the head of marketing there, when it was probably the only time that Tektronix was going to be a software company, which didn't last for long. And ultimately got recruited down to the Bay Area. And with them, worked for a company called Informix, which was, I would contend, still the best database in the world, and got bought by IBM. But I left before that and did a startup, an Israeli security startup that had just moved to Santa Clara. I was the second U.S. employee, and it was called Perfecto Technologies when I first joined the company, which sort of to me sounded like either a cigar or a cutting knife. And we changed the name to Sanctum. And ultimately, we sold Sanctum also partly to IBM and to F5. We split the roadmap. And at that point,
I see a theme emerging here, Diane.
Yeah, there's a theme here. Well, the good news is hopefully the theme is, I can sell companies, or they're companies I'm with sell. I don't know. It's an important aspect. It's an important aspect to the job I'm in now. But my husband and I moved back up to Portland, where we still had our home. We lived down in the Bay Area. And to be honest with you, Skip, if you had told me that I was going to go into venture, I would have said you were absolutely bloody crazy. To me, a VC was Sand Hill Road, and I really had no interest in that. And so I took some time off. I did some consulting, and somewhere in there, Voyager found me. Initially, I did security for 5 years. I had 20 plus years in technology. I did security for 5 years. That made me a security expert. And Voyager was looking at a company here in Portland in security, asked me, they got my name, would I take a look at it? I did. I told them it was lousy. They said, thank you very much. Thank you very much. I thought, well, that's an interesting, that's interesting. Firstly, I thought it was so interesting that a VC was asking me my opinion. That was the first interesting aspect. But after that, as I like to say, Voyager and I started dating. And for about a year, I walked around the streets with Eric Benson, who was just starting to look at the marketplace down here. And it had always been sort of curious to me because while I was an operator, especially in the Bay Area, Portland was always the city that had these phenomenal skunk works teams, whether it was EMC or Informix or Oracle, Symantec. They always had these amazing developer teams up here, and they put them up here in Portland for two reasons. One was the talent was here, and the second was to get them out of the politics of the home office. So it never really made any sense as to why there was this huge gap between when Sequent and Mentor Graphics were growing to there being nothing and being seen sort of as a flyover city when there was this great talent. And so when Voyager was like, "Hey, let's walk the streets of Portland and see if we see anything," the rest is history, as they say. Basically, we made an investment in Elemental Technologies, and from there to now, it's been 17 investments and a lot of good successes. And I guess that makes me a venture capitalist now, which I never would have thought would have happened.
No, I think it's an interesting sort of trajectory that you have in terms of getting to the point where you did make the transition into venture, and I think too what's been kind of interesting about your background is also how it ended up getting to the point where Portland sort of reached a maturity point where there were some interesting companies arising where venture was kind of a thing, right? Especially as it relates to the emergence of software, embedded video, technologies that really kind of came into being just as you were also
Absolutely.
transitioning professionally.
Absolutely.
And I'm wondering, oh, go ahead.
No, I think you're right, Skip. I think that, as I said, the core, and it's still the core, is that there's great talent here. And where there's talent, there's innovation. Where there's innovation, there's opportunity. And so, yes, there were certain market sectors because of some of the anchor tenants that were here. But on the other hand, there were also just incredible entrepreneurs that really just needed to be connected to sources of money.
Yeah, and I think too, as companies are starting to look at what comes next, we've got a wave of early stage companies now that are kind of getting going again here, and many of them are facing a very different funding environment than say those who came up out of the 2008 to 11 recession.
I agree.
And I'm wondering if you could maybe take a minute to kind of share what you're seeing in terms of the funding environment, just kind of globally, but then also what that means here in the Pacific Northwest for these startups.
Yeah, happy to. Listen, you've been on this journey with me and several others for quite a long time. And I think that, the uniqueness of Portland, the reason I love being an investor here in Portland is that the community works, right? That we all work together, we all share, we all lean in. And the result is we can take early stage entrepreneurs and really help make them grow. We obviously took a hit over the last few years, and we don't really need to go into all of the whys and whats on that, but it did. It had an effect. And if I were to look at overall deal flow from 2018, 19, let's say, until now, and to be honest with you, am beginning to feel much more optimistic about some of the deals I've been seeing in the last 9 to 12 months. But we took a hit, and that basically, resulted in two things. It resulted in, I think, some of the entrepreneurs that were looking as to where to start their businesses. Number one, going to other places. Number two, of course, I don't know what a headquarters is anymore. Very rarely do you see a company
I
that's
don't either.
completely yeah. I mean, Voyager is a regional fund. We invest in regionally based companies. It's become quite the sometimes murky lens to decide, is this resident here in the Northwest? Sometimes it's like, well, there are 3 engineers here. Let's call it good. But at the end of the day, it's there. There have been changes. Now, the reality is that the other part of what's happened over the last several years, between the hold up through 23, clearly 22, 23, is as the market really got nuts again, as valuations really got what I would consider to be unrealistic and unreasonable. What you found is investors, especially outside of the Bay Area, became more hesitant to pay the prices. The boys down south can do whatever they want to do. They're not making any money right now on playing the game that way either, for the most part. But I think that, when you leave Sand Hill Road and you're a bit more realistic in terms of how to make money, and number one, and number two, how long it will take to get returns. And so I think what you saw were a lot of investors outside of California back off on the pace of investing. And when you couple that with, specifically here in Portland, that we saw some slowing down of entrepreneurs moving here or starting new businesses, we took a hit. Now, the good news is there's been a reset in the market, which has been extremely helpful to early stage investors like Voyager, firstly. And secondly, things are getting better here in town. I am very optimistic about some of the directions that things are taking. And so we're starting to see new ideas. We're starting to see people come back. We're starting to see, sort of next generation innovation and technology grow from the talent that we have here. And that gives me a lot of optimism.
That's fantastic. And if we think about some of the areas in which new technology is emerging and being applied, what are you really focused on now as a fund? Like, what are you excited about?
Yeah, it's interesting. Of course, we spend a lot of time watching the market and talking about this. So not to overstate it, but AI, 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 AI. Firstly, AI is not new, as we all know. Voyager's been investing in AI for over a decade now. But I mean, the buzz around Gen AI, which is obviously incredibly disruptive, is actually going to disrupt, I think, some very entrenched markets that have gotten extremely, I'd say, old and stale. One really great example of that is marketing technology, or MarTech. In all honesty, and as I think Skip, Voyager has invested in MarTech quite a bit in its history. We've got some great companies here in Portland that are in that sector. But if you were to look at a market map of MarTech technology, you can't even read the logos anymore. I mean, it's so siloed, it's so dense. In the days that I was a chief marketing officer, today, I don't know if I could even do the job. I think you have to become an IT manager to be a marketing manager. And what's happening, this is one of these markets that I think is going to finally, after nearly a decade, blow up and be disrupted because of Gen AI. And I'm quite excited about potentially seeing some new innovation from a very entrenched market. On the other side of it, you're going to see new market opportunities that are going to be formed because the technology is there now to address it, in terms of automation, data analytics, huge industry disruption in areas. One of those areas for Voyager has been agriculture technology, ag tech. Really, I think it's at the head of the spear, tip of the spear, for where you begin to see digital to physical transformation, where, in terms of being able to improve productivity and innovation and impact in markets, is really starting to come to bear, because you can begin to really take very smart data analytics and start to apply that to critical applications. And so there's both entrenched markets that, like MarTech, that Haven't seen, I think, anything exciting in a long time. And then there's new markets, which I think are going to bring, it's sort of like in my, I laugh in my career, Back to the Future, bringing hardware back into my life. I started in hardware, I may end in hardware, but, basically being able to take this transformation to the physical world, that things like ag tech, and I think areas of health tech and manufacturing, et cetera, we're going to start to see really some solutions now that number one, solve big problems, but number two, are timed correctly so that the economic buyer wants to buy it. If I stick with ag tech for a second, Voyager's looked at ag tech for a lot of years, and the problem was always that you could see really cool stuff, right? I mean, I think Voyager did a investment in Skyward. It was our first investment in drone, the management layer, software layer for drones, and we got very, very knowledgeable about drones. And one of the applications for drones, and it still is, was in ag tech. And, that's all cool, except that the economic buyer, the farmer, wasn't ready to buy it. If you jump forward even the 5 years or so, what you've got now because of climate and labor and pesticides, or the mirror image of organics, all of a sudden, because of some of these older farmers also transitioning generationally, you've now got an economic buyer who's either being forced to look at technology because of the economics, or grew up with technology and doesn't know any other way to do it. So it's both sides of the market map that basically excites me right now in terms of the types of deals that we're seeing.
Are there certain areas where, if you were to give advice to someone who's starting out now and wants to do an AI startup, where in terms of their approach to how they're using or incorporating AI in their tech stack, like what would that advice look like? Because I would say that there's definitely some concern that some of the startups out there, they're purportedly doing AI, are really just putting a superficial wrapper around existing solutions or models that are offered by, say, the big seven tech companies. And
Yeah,
how
yeah.
does a startup differentiate itself?
Yeah, so I call that the sparkle dust. Um, I, I sit with these companies, and I'm like, you've just put sparkle dust on it, And by the way, the sparkle dust is important, right? But if I look at all of our portfolio companies, within 4 to 6 weeks of the open APIs being able to be there, they absolutely would have been foolish not to integrate the sparkle dust quickly, and especially where you've either got interaction with customers or content in a way that this was just an obvious optimization to their solution, either by the added efficiency it gave you on the back end for managing your customer base, or the value add that the customer saw in the platform that you were selling. So the sparkle dust is not to be underestimated. Having said that, and I'll speak for myself personally, I do see new deals all the time, these decks that basically I look at them and I'm like, it's all sparkle dust. It's built on the open APIs. Yeah, it's sort of cool. There's no moat, though, that is around these applications. And I think that when you really start to challenge these entrepreneurs on their go-to-market strategy, you immediately find that you're going to have some problems very early on. So right now, and as any of us in this marketplace know, there is a lot of excitement around AI. A lot of it, and again, this sort of just goes back to the future of looking at disruptive technologies. A lot of it starting at the bottom of the architectural stack in terms of the DevOps types of tools, et cetera, for developing these new applications. Personally, that's not what really excites me. There's a lot of VCs who love that layer of the architecture. And if you're that entrepreneur who's building at that layer, then you should go find VCs that are very interested in it. I personally like looking at things slightly higher in the stack that are solving business problems that actually I can understand, in markets that I can see the value. So that's a personal bias of mine, but it's going to take a little bit of time, right? The sparkle dust can happen in immediately. As I said, 4 to 6 weeks, it's not hard at all. The really disruptive innovation inside of new markets, it's going to take several months. Now we're beginning to see some of it. As I think I made an investment here in a company called Paxton that's in the legal industry. It's built from the ground up. Some really smart AI guys that had been in AI for a long time. And there's many of those that are coming. But those are the ones that I'm hoping over the next 12 to 18 months is where we're really going to see huge opportunity in terms of really being able to see not just the innovation of AI being able to help do cool things, but where the moat around that application makes it very hard for somebody else to copy.
I think that's great advice. And if we think a little bit about the go to market observation you made, I was wondering if you could maybe get a little bit more granular and what are some of the things you look for in a startup that's approaching you for funding in terms of when okay, yeah, they've crossed that minimum threshold of product market fit, and here's the types of metrics that we look for.
Well, you're assuming that I'm investing at product market fit.
That's a good point.
If only,
let's start there.
Yeah, if only that were true, Skip. If only that were true. The infamous product market fit is harder than most people assume. The reality is we're normally coming in prior to product market fit. But what we are looking at is a team of folks. What I like to say is build it and they will come as a really bad business strategy. Right. You can build something and say my baby is beautiful, and if no one gives a damn and you don't know how to extract dollars from wallets, it really doesn't matter. And as we also know, the best technology does not always win. In fact, often the best technology doesn't win. It really does come down to this issue of go to market and how do you extract dollars from wallets and how do you position yourself to do so. So, one of the things that I look for when I'm evaluating an investment in a company that is, as I said, in most cases pre-product market fit, but you can sort of see how they might get there, is if they actually early on understand that the go-to-market side of this equation, i.e. not just building their baby, but actually how they're going to sell it, is probably even more important. And, it is not always the case, entrepreneurs, early stage founders are often the technologists, and they really do believe that the baby is beautiful and therefore everyone should love it. And the reality is, if only that were the case, right? And so really, we look for entrepreneurs, founders that understand not only do you have to build something that is that works, that is disruptive, is interesting, has a roadmap that you can see how it's not just a feature, but how it's actually a solution or a platform to solve a big problem in a big market. But you really have to make sure that you're looking at a team, even though they won't get it right for a very long time. I mean, as an example, I have never seen a founding team get their pricing right. In fact, they could change their pricing 10 times before they get it right, and that's okay. The key is, do they know that they need to iterate on the pricing? Or do you keep throwing it against the wall and trying to figure out why isn't someone paying that? And so the issue of being able to understand that this is a founding team or a set of entrepreneurs who understand that building it is obviously maybe the fun part, that the reality is the go-to-market's going to be what makes you into a very big company. And that's where we try to help, right? I mean, I think, value add in always taking the board seat is really focused on the go-to-market side of this, in how do you get to scale? And more importantly, since we're an early stage investor and there will be follow-on investment rounds, how do you get to so that it is scaling so that you continually have an up round, right? It's math. And so how do you make sure that the milestones that you committed to in that first or second round are met so that the next round you have negotiating power to get more? And so we try to make sure that we're getting a plan to product market fit. But more importantly, from the point where I look at them, I'm just trying to understand, is this a founding team who even understands what product market fit means?
That's a really good set of observations there. Yeah, I can't tell you the number of times I've talked to early stage founders, and they're coming at it from the technologist perspective, where they spent way too much time building before they've had a single conversation with people who they think are going to buy it, whatever it is that they're developing.
Exactly.
Is it? Yeah. I mean, as you look at sort of the prospects for the local community here, I was wondering if you could do a little compare contrast into what you're seeing as a firm across, both the greater Portland markets as well as Seattle area.
Sure. Obviously Voyager is a regional fund. We invest in Oregon, Washington, and what we call Western Canada. I don't think the Canadians call it Western Canada, but Vancouver to Alberta. And so we've got a, very firm footprint, from a local geography standpoint in all three markets. Now, at one level, there's a lot of similarities. Culturally, there's a lot of similarities in behavior, how entrepreneurs build teams, talent, et cetera. But, if I were to just get this specific to your question of Portland versus Seattle, listen, the reality is Seattle has a lot more anchor tenants. So if you look at the technology ecosystem up there, you've got several layers, right? You've got it's Seattle is the cloud infrastructure capital of the world, and it's not just Microsoft and Google and Amazon. You've got Oracle and Baidu and others, all who have their cloud headquarters up in Seattle. Why? Because the talent is there. But it's also all these other companies, some of which you don't even think of as technology companies. I mean, some obviously like Twilio and others, but you've got Starbucks and Redfin and folks that you think are not technology companies, but I'm telling you, the technology that's coming out of those companies and the technologists that are in those companies are largely the ones that are spinning out and starting all these new companies. So there's more anchor tenants up in Seattle, and that does make a difference. Having said that, I would say that we balance some of that out, that since a lot of our entrepreneurs who are starting businesses here in Portland aren't homegrown, they're moving here from other places. Now, as I said previously, we did take a hit. You probably, Skip, more than anybody understands the demographic numbers of what's going on here in town. But it's been noticeable in terms of the influx vis-a-vis 4 or 5 years ago. I think that may be changing again a bit, which is great. And they choose Portland over Seattle in many cases just because, for the same reason we all do. We love it here. And so there's a difference in how things are built, but because of the environment up in Seattle, there is a higher volume of deal flow that's coming out of there than here. Now, what's interesting though about that, and we'll see how this changes, if you again go back to where you asked previously, sort of in that 2007 to 2014, 15, there was better deal flow here in Portland than Seattle. So we've seen it go both ways. But right now, I'd say that we just have to continue to get healthier here in terms of just the total environment. But we've shown that we've been there before, so I have no doubt that we'll get there again.
That's great. And as we kind of near the end of our session, I was wondering if you had some thoughts on whether the Pacific Northwest as a whole has, a chance to regionally be a competitor. You've had experience in your career and a lot of time spent in, Silicon Valley, Sand Hill Road, and that ecosystem, and it's a regional powerhouse. And Voyager's been a Pacific Northwest focused fund for quite some time, and how do you look towards the future? What's your take as a firm on the Pacific Northwest? Just as bullish as you were when you started out at Voyager?
Yeah, totally. And it's really sort of interesting because I think, as you're aware, we've been fundraising, and one of the things that we have modeled out, which is really fascinating because it surprises a lot of people, is that this region that we're in is actually, if not the biggest, one of the biggest opportunities in venture capital. And some of this has to do with the exit value ratio between the VC funds that are resident here the amount of monies that are invested to the exit value generated and that multiple that results of that. And we outpace Boston, we outpace the Midwest, we outpace Texas. We actually outpace California, but it's not in sheer dollars, obviously, right? But if you look at the volume in California of the number of players there that are all competing for these deals versus the opportunity here to make money in this region as a VC, it's a really nice equation. So, listen, it's a place that you can build technology anywhere, and as we have found coming out of the pandemic, um, these founders are building it anywhere. They're sitting on lakes and mountains and God knows where, writing code. But I do believe that because, as I was saying before, especially with Seattle as an example, with there being such a magnet towards talent that sits here in this region from a developer standpoint, that you're just going to continually see us be one of the recognized centers for venture capital going forward. And, again, I think that as we see hardware starting to come back into the picture, this actually is an area where I think Portland outdoes Seattle, just in terms of the core skills and capabilities and the anchor tenants that we have here. I think we're going to start to see a rebalancing as it relates to areas around automation and the data analytics between the digital and physical world. So I'm very bullish on the region, and I'm very bullish on Portland, given some of the new innovation and technology that we're going to see come forward.
Well, speaking on behalf of TAO, we share it and look forward to continued success for the region and continued partnership with you and with Voyager as well, helping to make that vision a reality.
Thanks, Skip.
Thank you for taking some time. Yes, I know you've got a busy schedule, and always a pleasure to chat with you, Diane. Thanks.
Always you too, Skip.
I also wanted to say as we wrap up, a big congratulations to Diane Fraiman. As many of you know, she was recognized this year for the Lifetime Achievement Award as part of the Oregon Technology Awards. Long overdue, in my personal opinion. She's been a stalwart and supporter of the local community here for quite some time. And we're really pleased and excited for her, and we'll be celebrating her in September at the individual awards. So congratulations, Diane.